when all the hyenas are up in arms, everybody does the same thing. So it doesn't matter what your hedges is at. It doesn't matter if you're trying to buy gold or the Bitcoins. In times of crisis, everything correlates and will fall.
This podcast contains the arguably witty banter of two friends, Skippy and Dougals, that like to debate about investing. The content is intended to be entertaining and for informational purposes only, not investment advice. You should do your own research and consult a financial professional before using any of the information in this podcast, and especially before investing.
Did you watch the DNC this week?
I did not.
There was a lot of diversity going on at the DNC. And I mean that in so many different ways. Like the range of people that spoke there. You had military folks, former politicians, all walks of life. They talked about gun violence. It was like a really broad variety, some of it better than others. I'm going to go ahead and put that out there.
Okay.
I love this in Jon Stewart's latest. This is another Jon Stewart. Talked about that last week. Another Jon Stewart piece. He was like, and there was this rumor of a surprise guest that was going to make it. The rumors were about Beyonce, Taylor Swift, something like that. And he goes, and so I was waiting. And then he shows a clip and it's like, city councilwoman from Topeka, Kansas, whatever that comes out.
Yeah, I'm kind of happy to steer clear of that.
Yeah, but it's probably for the best.
There's like enough politics happening. My favorite political thing that's happening right now is the yard signs that say, whichever candidate stops sending me text messages. If that hits home for you, that will really hit home. The amount of spam, I'm not on any of those lists at the moment, which is great, but fingers crossed I can through
it's so much. And I get these ones that are something like, give us money in the next hour and we'll 700% match it. And I'm like, if you got that kind of cash, like just part of me wants to like send a fake like $1 billion to them and be like, you gotta like pay up here, people. Like if you can match 700%,
so you can buy TV commercials. I mean, this is where it gets. Why do you make me talk about politics? I don't even want to talk about politics.
I don't know.
At all.
I'm sorry.
But no, I get you. Yeah. Sometimes there's been times in the past where I've gotten caught up in those. Somehow they get my number and they're sending me text messages to send them $3 every 7 seconds or whatever. I literally just want to throw my phone as far away as possible in the middle of the street.
Yeah, it's pretty bad. And then they get to a point where they're like, we haven't heard from you. And I'm not mad. I'm just disappointed. And I'm like, I can't even. All right. I want to start off reaching to the fishbowl to talk about the latest Howard Marks memo. Is that okay with you?
Oh, it's good. These comics in here, dude.
Yeah, I know. Howard Marks. We love Howard Marks. We talk about him all the time up in here. We discussed a research recommendation last week from his 13F. This week, we're going to talk his latest memo, which is called Mr. Market Miscalculates. He kicks it off by saying, this is who Mr. Market is, in case you don't know, and I am going to do the same. Mr. Market, Benjamin Graham introduced the concept, the metaphor of Mr. Market. I'm going to read this paragraph verbatim because it's super helpful. Imagine that in some private business you own a small share that costs you $1,000. One of your partners, named Mr. Market, is very obliging indeed. Every day he tells you what he thinks your interest is worth, and furthermore offers either to buy you out or to sell you an additional interest in that basis. Sometimes his idea of value appears plausible and justified by business developments and prospects as you know them. Often, on the other hand, Mr. Market lets his enthusiasm or his fears run away with him, and the value he proposes seems to you a little short of silly. That's Benjamin Graham's Mr. Market metaphor, and it's a way for us to think about the market as a whole. Imagine it, personify it, think about it as this person that's making irrational decisions for the most part, or seemingly. That's Mr. Market. And what Howard is saying is Mr. Market oftentimes miscalculates, and that leaves potential opportunities for investors to take advantage of. Anything you'd add to Mr. Market?
No, this is why investing is maddening and unfair. This is also why there's clear edge available to you, because sometimes there's these manic depressive investors who are real people just like us, who decide that the world is coming to the end, and sell you Nike at $70 a share. You see what I did there, Douglas? See what I did?
Oh, there
See
it
what I
is.
did?
There it is. Yeah. So then Howard goes in to give a little like short version of what's happened over the last 3 years to say how much Mr. Market can swing. So if you go to 2020,
Well, and we had listeners, sorry to interrupt, but we had listener mail, I think 2 weeks back, about the Japanese carry
yes,
trade and everything else. Howard does a more academic, more professional answer. Like we have to throw some jokes into everything
yeah,
we do.
of
It's just what we do. But if
course,
you're really interested in that, pick up this memo because Howard provides a like a just more professional answer that really goes into a lot of detail there.
let's not throw around the word professional and say
Academic is
there
really
you
what I
go,
wanted to
there you go,
say.
because that implies that we don't come with the utmost of professionalism. And come on now,
We just got to bring some fun because there's so many terrible
that's
investing
true.
shows out there that are boring. But
Yeah,
anyways,
that's
go
true.
ahead.
So I'll give this is the brief look. He, as you mentioned, goes more academic. The brief look is, and y'all will recall all this if you've been paying attention to the markets in the last 3 years or so. So in 2021, it was inflation's transitory. Go for the gold. Go for the gold. Then it was, actually, inflation might not be so transitory, and the Fed's going to raise interest rates. 2022 gets real bad. Then late 2022, they're like, the economy might be looking bad. So I think we're going to cut those rates again. So then 2023, back off to the races. Those rate cuts never happened, still have not happened to this point, but it doesn't matter. From 2022 to July 2024, the market was up 54%. Who cares? Then the Bank of Japan raised interest rates. We're like, oh no, there's going to be this carry trade that's going to unwind. And we're also getting some mixed economic news from the US. So then you get the great stock market crash of August 5th. Then, as we talked about last week or the week before. So what he's saying is if you look at all this, it's just a lot of swinging back and forth of according to what Mr. Market is saying that day. I love
Yeah.
this little quote from him. In the real world, things fluctuate between pretty good and not so hot. But in investing, perception often swings from flawless to hopeless.
Mm-hmm.
And that says about 80% of what you need to know on the subject.
Completely. Mic drop.
The last thing, there's lots in this, but the last thing I'm going to say is he said it's an old adage, so I don't know who said this or where it comes from, but I think it's pretty cool. Or it's not cool because it's talking about crisis, but it says, in times of crisis, all correlations go to one. I love it. I love it. What that means, if I were to say this in lay person's terms, is that when all the hyenas are up in arms, everybody does the same thing. So it doesn't matter what your hedges is at. It doesn't matter if you're trying to buy gold or the Bitcoins. In times of crisis, everything correlates and will fall.
Well, and the screenshot he has right in front of that shows a day where the Asian markets, the UK market, the European market, the S&P 500, the Nasdaq are all basically down 3%. I agree. I actually had that quote highlighted. It's so true. But what correlation doesn't go to one is cash. And I think that's why Buffett's sitting on so much cash, because the optionality that he gets when Mr. Market freaks out is insane. Just to tie up a loose end from last week, it's a great position. Seth Klarman even talks about how painful it is to sit on cash in a time like this, but how necessary and advantageous it can be.
The tough thing when you are not Seth Klarman or Warren Buffett is that what you're really talking about at that point is market timing. And
Yep.
no.
True.
So-
I'm gonna read, to put a bow on this. I'm gonna read
Sure.
a quote from one of his cartoons. On Wall Street today, news of lower interest rates sent stock market up, but then the expectation that those rates would be inflationary sent the market down until the realization that lower rates might stimulate a sluggish economy has pushed the market up before ultimately it went down on fears that the overheated economy would lead to higher interest rates.
Yes.
This is when I scream complex adaptive system. Like there's so much going on that for anyone to see one piece of news and say this is a clear path to somewhere else is not really true.
No.
Well, unless Douglas, you buy stocks based on quality fundamental analysis. You get some deals. No?
Well, yes, I was just, got to bring a little humor to it. That's true. That's true. Today, this is mostly a premium episode today.
Mhm.
Skippy's run the screen. Skippy may have made some purchases. Is that accurate?
Yeah, I did.
Okay. So we're going to talk about those as research recommendations. Can I hit on one more thing before we do that?
Let's do it.
One more piece, blog post. Title is You Don't Know How Bad Most Things Are, Nor Precisely How They're Bad. This is on the On Less Wrong blog, and the post is by Solenoid Entity. Definitely a real name. Most of this post is about piano tuning, but I'm going to try and tie a little analogy metaphoricals to it, and you can call me out if it's a whole bunch of nonsense. I'll give you the backstory. Author plays, I think it's violin, was rehearsing with an orchestra. They did the rehearsal. They were like, oh, that rehearsal was tickety tiz night. But then people run over to the piano and they're like, the piano is off tune. Tuner, can you fix this piano? Tuner's like, yeah, I can do it. Yeah, I got surge pricing right now because you need it in a few hours, but I'll do it. So I said, okay.
Mhm.
And the author was like, I couldn't hear that the piano was off. So I stuck around and hung out with the tuner because I wanted to understand what was going on there. And so the blog post walks through the conversations with the tuner and what they actually ended up tuning. I'm gonna skip a lot of the detail because I don't really understand pianos, although I understand a little bit more after this. But they were playing with the strings, they were looking at different thickness, they were talking to him about the keys and what a piano key does, and making
Yeah.
all these slight tweaks.
No, I'm listening.
So then all this stuff happens, and at the end of it, they're like, now you see how the piano sounds so different? And the author's kind of like, kind of, maybe, right? But I don't know. And then the author asked the tuner, why don't you just use one of those auto tuners? Like there are machines that can do this stuff for you. And the tuner says, the whole thing is a negotiation with the piano. You can't just read its orders and expect it to sound good. Here's what I took away from this whole thing. I think there's this question of how important these small distinctions that like take expertise are that no one else notices, and how when you take those small distinctions away over longer periods of time, we get big fundamental changes and understanding to how anything works.
Mhm.
I relate that to investing and the market because we talk about passive versus active a lot of times. I think passive is great for a lot of people, like vast majority of people. And when we start just listening to, I don't know, the clutter and the noise, let's go back to the last piece. When people start listening to that, but take an active stance, and they don't necessarily notice the difference between 2020 just being a bull market or 2020 them being good. Over compounding long periods of time, I think it makes a big difference, and people start to understand less about fundamentals. That might be a stretch of a comparison, but that's what came to my mentals when I read this.
Yeah, I completely agree. I love the meme of the
Look at
guy
me.
pointing in the mirror, and they change the quote all the time, but it says something like, you know, it wasn't interest rates dropping for 40 years on end. It was you picking great real estate assets. Like it was
That's
it was
right.
all you. Or you can do the same with stock.
Yeah. I like it. I like it. You'll find this on the Substack, skippydougals.substack.com. This and other pieces, other hot takes that we found around the web. You ready for the premium?
Yeah, we'll talk to you next week.
And if you want segments like what we're about to talk about, go to skippydougals.supercast.com and you can sign up. We got 2 different premium offerings there. There's one that you get episodes early and you get to hear stuff like this throughout the year whenever we release it. There's another that's the annual one where you also get at the beginning of the year when we come in with the great hotness and we talk about what we did last year, what the returns were, and what we drop in for that year. Your choice, skippydougals.supercast.com. Check it out if you want to become premium and listen to what we're about to talk about.